Good morning, everybody. I'm Ed Parcaut here with Mike Kelly, and we're Real Estate Jerky Daily.
Once again.
That's right, and it's Thursday, Thirsty Thursday.
Yes. What are we doing Saturday?
I'm going over the edge.
We're dropping off a building, right?
Yeah, and if you want to support me, just go to edovertheedge.com. I don't have it there right now because I was doing other stuff yesterday. I guess I didn't set up my Instagram. Oh, there we are.
There he is.
There goes I. All right, let me get rid of that. All right, so today is initial jobless claims and consumer price index. That's CPI, if you didn't know the acronym for it. And we're going to start with CPI, which measures because it actually came out first this morning.
Interesting.
Yeah, well, and then initial jobless claims comes out a little bit later because, the government can't get up early. Oh, so CPI measures inflation on the consumer level, and it increased 0.3% month over month, above the expectation of only 0.1%, and decreased 0.1% to 2.4% year over year, a little higher than the estimate of 2.3%. Yeah, so the core CPI, which strips out food and energy prices, increased 0.3% for September, slightly hotter than expectations of 0.2%, and increased 0.1% to 3.3% year over year, above the 3.2 estimate. So it shows that it was a little bit hotter, but overall, I mean, the biggest component that is still the housing part of it,
right?
And if you look out, where did I have you?
The winder.
Oh, see the trash man.
Yeah.
So the transportation costs, which rose 1.4% during the month, and includes motor vehicle insurance, motor vehicle maintenance and repair, airline fares, all which rose. The motor vehicle insurance rose 1.2% last month. So basically, all these little things are going up. Shelter costs, which makes up 45.8% of the core index, rose 22% last month, and 4.85 year over year, which is decreased from 5.2. So overall, these numbers are still there. It's what we learned a long time ago being on our show is that the CPI numbers really took out the stuff that's the most important thing, which is the homes that you actually own and the value that they go up. They took that out. So no matter what they say, inflation is still here and it's going to keep going up.
Yep.
And it's not, even though they use these skewed numbers. And so bottom line today, let's get initial jobless claims and then I'll tell you what happened.
Okay, good.
Initial jobless claims, which measures individual filing for unemployment benefits for the first time, was reported at 258,000 claims for last week.
Okay.
This represents an increase of 33,000 from the previous week revised figure of 225,000 and was more than the expectation of 230,000. Continuing claims decreased 1.86 million from the previous week revised figure of 1.819 million.
Oh.
Yeah.
That's up considerably.
That would be more like they increased, didn't it?
Yeah.
Rose 42% to 1.68 million, which is the highest level since July. So I went in and they do these little snippets, and someone wrote this wrong, which measure 42,000 to 1.86 million, which was the highest level since July, near the highest level since November of 2021. And it continues to show that slowing down in hiring is harder to find a job once let go. People remain on for longer. So the biggest problem we run into is that everybody wants to give you a part-time job, not a full-time job. Because I have a client who's been out of the service and they're trying to find a full-time job, and everybody wants to give them guaranteed 30 hours a week. That's still not a full-time job.
No, I was just thinking of her as you were speaking about that, and that's sad.
Yes,
full-time positions are hard to come by.
Yeah, and she wants to get in the be a teacher, which why don't you go hit yourself with a hammer? And it's like, and so she's a para, whatever and that's somebody who helps out in a classroom. Well, they only get 30 hours a week. And it's like, okay, that's not going to work unless you do 2 years history of that. So, and that's not going to happen.
No. And she wants to buy a home, right?
Yeah. That's the whole purpose. And it's like, keep looking.
She's probably looking everywhere, right? Private schools, public schools, everything.
Take a job somewhere. It doesn't matter.
Well,
just get a full-time job.
What do they pay you at Chick-fil-A?
Well, they don't pay full-time there.
But I mean, she could probably go right into middle management at In-N-Out and make $100,000 a year.
I don't think they're hiring for those jobs because they got enough people there already to fill those jobs.
They're actually closing stores like in Oakland.
What? Not In-N-Out. In-N-Out's about ready to open one here in Modesto. Another one.
I'll be our third In-N-Out.
As you can tell, you don't go all the time.
No, I don't. But I always forget about the other one out more towards Costco.
I don't, because that's by the freeway. It's always
Well,
over
when
there.
we come back from Mexico or Colorado and it's late at night, we'll stop there, and that'll be our off the plane dinner and nothing else till the next day. So
You don't off the plane. You don't. Where do you come in at? San Francisco,
San
or
Francisco.
Sacramento?
Yeah.
Yeah. See, if you come in Sacramento, actually San Francisco, there's one right there outside the airport.
Yeah.
And you can get it real quick.
I just hate eating in the car. It makes a mess.
Oh no,
Or I make a mess.
I prefer it warm. I don't want it
Yeah.
cold. All right. So bottom line numbers, what happened right now is we are actually up a few basis points earlier.
Mm-hmm.
We were up a lot more during our meeting this morning, so I locked my clients.
Oh, good.
Yeah, so we're only up 3 basis points right now, and the 10 years up 2 basis points to 4.0844. Remember, that was down to 4.6 something a couple weeks ago.
Right.
Yeah, so I mean, these numbers are not bad, but
Not as good as it has been.
correct. But I mean,
we'll get good again.
right. But there's a chart. I don't know if I have it. Had it on my phone. You have something to talk about real quick?
Is this inventory from earlier in the week?
Last week? Yeah, that's the inventory that we talked about on Monday.
On Monday. Okay. So then I don't have anything to talk about. Other than I've been watching through the office. There are a lot of agents in our office. They're all very, very, very busy. They're all writing contracts. They're all writing over list price. They're all showing proof of funds. It is a busy time right now. So earlier in the week, we were talking about this lull, this little increase in interest rates gives you a little bit of security to not compete with as many buyers. I think I'm a liar because I see activity like crazy. So buyers are out there. So there is competition right now.
Well, no, what people realize is just because the first time Fed does anything, rates go up a little bit,
Right.
But then they go down even faster on the other side. I found a chart that actually showed every time for the past, 40 years when the Fed did it the first time, what happened to interest rates.
Right.
And it was put on Facebook and from the MBS highway. And we're all going, okay, it would have been nice to have this 2 weeks ago.
Yeah, it would.
But they probably didn't put it together, but it breaks down how much of a percent each time that it goes up right after the Fed lowers for the first time. And then what the number is. I'll have it for Monday so we can, or I guess tomorrow is Friday. I'm already gone for the weekend.
Oh.
Yeah.
That'll be a nice weekend.
No, I'm just kidding. I'll be here tomorrow. I just wasn't. These days being busier. It's like, what day is it?
I know.
Yeah,
I know.
I guess I should have known since I was at Rotary today. Today was Thursday.
Yeah, I know. But Rotary goes by so quickly. You could think, oh God, was that already yesterday?
Yeah.
So,
all right. So I'll have that little chart that breaks it down. But basically, it's going to show that we're going to see a big increase over the next month. Few months to a year of rates dropping. So it is the time to stop playing around. It's that tipping point we've been talking about that's been here for a while. It tips many times because if you look back, I looked at a bunch of my clients a year ago. They were kind of hearing these rates, right? And because I'm like, did you freeze?
No.
Oh yeah,
I may have over there, but I'm still talking over here. See?
Yeah, I see it now. You're moving. So I mean, it's time. Now is the time. Stop wasting your time because you're not going to get into a home if you keep playing around.
Well, and the thing right now is, like we always say, lower price, higher interest rate, but that'll change.
Yeah.
But lower price. You can't change the purchase price. It's going to be lower now than it is going to be in 3 to 6 months from now.
Yeah, because
I guarantee it.
Yeah, because people who bought over a year ago at 7-something% all of a sudden got from me 5.875. And
right.
They're freaking, this is amazing. Thank you so much. I'm like,
I'm saving $300 and $400.
Well, one guy's saving $800.
Oh, that's a big one.
Yeah. So they're like, thanks for staying in touch with us. But the first time we did it, it was a unique property, and it took us twice bites at the apple to figure out how to get it done.
Mm-hmm.
And then I just told them from here forward, just keep what we figured out this way.
Available.
Don't change this. And then we'll be able to do another refinance down the road. But I mean, the refinance flew right through. They were like, I called him one day and I was like, I heard him on the background. Oh, here's a like something's going to, where I'm calling him to give him some bad news or something. Because the first time we did it, I was like, okay, it didn't work this way. Go do this, this, and this. And we'll get it. And then the next time we went through it, well, the refinance, it flew right through. So he was waiting for that shoe to drop.
Yeah.
That we had a problem. Yeah. And so I'm like, we're done. And he's like, oh my God, that was so fast. When you figure out how to do it right, because it's a unique property, then from there forward, it's easy to do. But other people are like, it can't be done.
It can't be done.
Yes, it can. You just, you do it the way you figure a way out. That's how these things are.
Yeah. That's why the rules are there. is to figure things out.
Well, you push it as far as you can without breaking it.
Exactly.
Oh, wow. Remember I said we're only down a little bit? We're down 14 basis points now. Yep.
Let's go celebrate.
No, that's bad. That's not
Let's go celebrate.
That's not the 10-year down. That's the mortgage-backed securities, because we lost 21 yesterday. And then the day before that, and then the day before that, we lost 50. And that's why the only part of my industry that I don't like is the fact that we're, watching the rates to lock. Yeah. If it was, back in the 70s and 80s, it didn't move. Right. VA and FHA, they like, this is your rate. VA would tell you, this is your rate. Yeah. This is your rate. This is your rate. That's it.
Yeah.
Then everything went to risk-based pricing, and that's why this is so volatile now.
Yeah, we're living in volatile times.
Mm-hmm. And I'm wondering how the hurricane and then the tornadoes are going to affect these continuing claims and unemployment claims, because
I would imagine they would rise.
Well, if you can't even file for your $750 from FEMA,
right,
because you don't have internet or a computer or a phone because it washed away,
right,
how are you supposed to file for these continuing claims and new claims?
True.
So I think it's going to mess, the numbers are going to be messed up.
Gone.
Yeah, I think the numbers going forward for the next few months are going to be messed up because of that. And it should be worse, and we're not going to see that till after the election.
Yeah, it sucks.
Just like California.
Yeah, it sucks.
68 billion.
All right, that's all I got.
I'm done bitching today.
I didn't really hear that as a bitch. I just thought it was factual. Activity has increased, guys. If you're a buyer, get out there. It's going to be less than what the activity is going to be less than what it will be very soon. So get out there.
So what you're saying is do it now because it's going to get busier.
It is going to get busier.
Yeah. And this year, I think it's through November, December, we're going to see a huge amount of people, still buying, which normally slows down.
Right.
Because that fact is the rates are going to continue to keep going down.
Yeah.
And they will. We just have to get past a few weeks and numbers and certain things. So when the next month these numbers come out and show that unemployment's higher, and the things that we just went through, what did they just come out with, that what the PCE and all those other things? Yep. Yeah, unemployment numbers come out and show they're worse than we thought they were right after the election, of course.
Yeah.
Rates will go down.
Yep.
All right, that's all I got.
Peace out.
Oh my goodness, now we're up 7 basis points.
Wow. Look,
see what I'm talking about?
They're listening to us.
No, what I'm saying is that's the volatility.
Yeah.
We were down 14, now we're up 7. And next thing, so it's like, that's what we deal with as loan people. So it's people go, what should I do? Are you happy with the bird in the hand, or do you want to play with the two that are in the bush? Yeah. So lock it now and don't worry about it, and then refinance it in 6 months from now.
It's a gamble.
Yes. Don't play the game.
Bye, kids.
Bye. Have a great day.
You too.
All right. Well.